Short exercise 2-11. We're going to create a company's chart of accounts. So this instructor tip should pop up automatically, assuming that you have your pop-up blocker turned off, which you should have turned off. So what we're talking about is this account right here. It's called unearned revenue. So here's my tip. Later in this chapter, we learn that when a customer prepays us for giving them a service, it's considered unearned revenue for us until the service is given. Until the service is given, unearned revenue is a liability because we owe the customer a service. So for now, just remember that unearned revenue is a liability. Why is it a liability? Because someone has paid us ahead of time, but we've not provided them the service, so we owe them something. We owe them the service. So let's talk about this problem. And of course, if you ever need to see the instructor tip again, you go to question help and click on instructor tip. So what a chart of accounts is just the official list of a company's accounts. So let's look at this company's accounts. Notice the cash account is called cash. It's not called checking account. It's not called savings account. This company calls it cash. So one reason we have a chart of accounts for a company is it forces us, when we are journalizing, when we're entering a journal entry, to choose only from the list of accounts on the chart of accounts. That prevents one person from calling the cash account cash and another accountant entering a transaction and calling the cash account checking account, because then it would be two different account names for the same account. So this chart of accounts forces all accountants and the bookkeepers for the same company to be consistent in the names and in the names of the accounts and the account numbers. So Raymond Auto Body Shop has the following accounts, which I've opened and are right here. We're going to create a chart of accounts for Raymond Auto Body Shop using the standard numbering system. The standard numbering system means assets start with a 1, liabilities start with a 2, equity starts with a 3, revenues start with a 4, and expenses start with a 5. Now the reason a chart of accounts has account numbers is once you are doing a lot of journal entries for a company, you're going to become familiar with the account numbers. And it's going to be much faster to enter the account number on the computer's keyboard rather than to type in the name. All right. Each account is separated by a factor of 10. So what that means is the first one is going to be called account number 100. The next one is 110. There is no 101. All right, use the first available line under each section, which means assets is a section, liabilities is a section, equity. In other words, don't put the first one here, put the first account right here. And if a box is not used, leave the box empty. Do not select any labels. So what we're going to do is we're just going to work through here in order. We're going to start with assets. So we need to find, let's start up here and find our first asset. Working our way down, our first asset is cash. So we're going to say cash, and remember all assets start with a 1. And since this is going to be our first asset account, we're going to start with account number 100. Okay, we left off with cash. We're going to work our way down. The next asset is automotive supplies. Now, automotive supplies are things like oil, rags, etc. And since it's an asset, we have to use the account number of 100, or starts with a 1, so the next one would be 110. And then working our way down from auto supplies, our next asset would be equipment. And that would be the next asset number, which is 120. Now we're going to work on liabilities. So let's start up here. Accounts payable is definitely a liability. And remember, liabilities start with the number 2. So one way to remember it is that this is kind of the order of, well, these three, assets, liabilities, and equity, are the order of the accounting equation. Assets equals liabilities and equity. And so assets start with a 1, liabilities start with a 2, equity starts with a 3. And then we have revenues and expenses, which are income statement accounts, and they are part of equity. Those are listed next. So the account numbers go 1, 2, 3, 4, 5. So back up here, we left off with a AP. So let's find our next liability after AP. Looks like our next liability is unearned revenue. Remember, unearned revenue, we said, was when a customer pays us ahead of time. We've not given them the service, therefore we owe them a service. So remember, liabilities are things we owe. So unearned revenue, that's going to be 210, the next account number in line. Now let's work on equity accounts. So working our way from accounts payable, let's find our first equity account. It looks like, let's start with the main one, which is capital. And equity starts with a 3, so that's going to be 300. And then if we look through here, the other equity account is withdrawal. So notice the equity accounts have the owner's name in them. So Raymond, comma, withdrawals. So that's going to be 310 because it's the next 300 account number. And I don't see any other equity accounts. Then we're going to go to revenues. So working our way down from AP, our first revenue looks like it is service revenue. So service revenue, and remember, revenues start with 1, 2, 3, 4. So this will be 400. Now, do you see any other revenues in this list? Now, some of you might be saying unearned revenue. Remember, unearned revenue, we said, was a liability. Why? Because an unearned revenue occurs when we are paid ahead of time, but we've not performed the service. Therefore, we owe someone a service. So that's not a revenue. It's unearned revenue. Revenue down here are always something that are earned. When we sold something and we've earned it. In other words, we've completed the service or we've given them a product. So there are no other revenues in here. So now we're going to work on expenses. So starting here, working our way down, our first expense looks like it's utilities expense. And remember, expenses start with a 500. Why do we know that? 1, 2, 3, 4, 5. And going back to our chart of accounts, we've done utilities expense, working our way down. Our next expense is what? Looks like advertising expense. So that would be the next 500 number, which would be 510. Awesome. So now the purpose again of this chart of accounts is when the accountant or bookkeeper is entering a journal entry, if the company purchases some rags or cleaner to use in the business, they would choose automotive supplies. They would not choose cleaner, an account called cleaners, or an account called rags, because there is no account called those things. So you use the closest thing that fits.